financial life, from applying for loans and credit cards to renting an apartment or even getting a job. But understanding credit scores can be tricky, and improving them can seem like an overwhelming task. That's where I come in. I'm here to share my knowledge and experience with you and provide you with tips and strategies for improving your credit score. Whether you are just starting to build credit or looking to take your score to the next level, this video is for you. So, let's dive in and explore the world of credit scores together. Don't forget to hit the subscribe button and turn on notifications so you never miss a video. Let's get started. Credit scores and reports are essential to your financial health. They reflect your creditworthiness and can determine whether you qualify for a loan, credit card, or other financial products. Here is why credit scores and reports are important and tips for improving them. Importance of credit scores and reports. Qualifying for loans and credit cards. Lenders use credit scores to determine whether you qualify for a loan or credit card and what interest rate you will receive. Employment. Some employers use credit reports as a factor in the hiring process, especially for positions that involve handling money. Insurance. Insurance companies use credit scores to determine your insurance premiums. Renting an apartment. Landlords use credit scores to evaluate potential tenants. Tips for improving credit scores and reports. Pay your bills on time. Late payments can hurt your credit score, so it's essential to pay your bills on time. Keep your credit utilization low. Your credit utilization is the amount of credit you are using compared to the amount available to you. Keeping it low can help improve your credit score. Check your credit reports regularly. You are entitled to a free credit report from each of the 3 credit bureaus, Equifax, Experian, and TransUnion, every year. Review your reports for errors and dispute any inaccuracies. Keep old credit accounts open. The length of your credit history can affect your credit score, so keeping old credit accounts open, even if you don't use them, can be helpful. Don't apply for too much credit at once. Applying for too much credit at once can hurt your credit score. Use a credit monitoring service. A credit monitoring service can alert you to changes in your credit report and help you track your progress in improving your credit score. Improving your credit score and maintaining a good credit report takes time and effort, but it's worth it in the long run. By following these tips, you can improve your creditworthiness and qualify for better financial products. Pay your bills on time. Late payments can hurt your credit score, so it's essential to pay your bills on time. Yes, paying your bills on time is essential to maintaining a good credit score. When you make late payments, it can negatively affect your credit score because it suggests that you are not able to manage your finances responsibly. Late payments can remain on your credit report for up to 7 years, and the longer the delay, the more damage it can do to your score. If you are struggling to pay your bills on time, there are a few things you can do to avoid late payments. Set up automatic payments. Many banks and credit card companies allow you to set up automatic payments to pay your bills each month. This ensures that you never miss a payment and can help you avoid late fees. Set up payment reminders. You can also set up payment reminders on your phone or through your calendar app to remind you when a payment is due. Prioritize your payments. If you are unable to pay all of your bills on time, prioritize your payments by paying the most important bills first, such as your rent or mortgage payment. Contact your creditors. If you are struggling to make a payment, contact your creditor as soon as possible. They may be able to work out a payment plan or offer other options to help you avoid a late payment. Remember, making on-time payments is one of the most important things you can do to maintain a good credit score. By prioritizing your bills, setting up automatic payments, and staying on top of your finances, you can avoid late payments and keep your credit score in good shape. Late payments can result in late fees. When you make a payment after the due date, you may be charged a late fee. These fees can add up quickly, making it even harder to stay on top of your bills. Late payments can lead to higher interest rates. Late payments can also result in higher interest rates, which can make it more expensive to borrow money in the future. On-time payments are a positive factor for your credit score. Paying your bills on time is one of the most important factors in determining your credit score. A history of on-time payments can help boost your score and show lenders that you are a responsible borrower. Late payments can stay on your credit report for up to 7 years. Even if you make a late payment by just a few days, it can stay on your credit report for up to 7 years. This can make it harder to qualify for loans, credit cards, or other financial products in the future. Tips for making on-time payments. In addition to setting up automatic payments and payment reminders, consider creating a budget to help you manage your finances more effectively. You can also try to negotiate payment due dates with your creditors if your payment schedule doesn't align with your income schedule. Remember, paying your bills on time is essential for your financial health. By staying on top of your payments, you can avoid late fees, keep your credit score in good shape, and demonstrate to lenders that you are a responsible borrower. Yes, keeping your credit utilization low is another important factor to consider when trying to improve your credit score. Your credit utilization is the amount of credit you are using compared to the amount available to you, and it's one of the most significant factors that impact your credit score. Here are some tips to help you keep your credit utilization low. Aim to use no more than 30% of your available credit. Experts recommend using no more than 30% of your available credit to keep your credit utilization low. Pay down your balances. If you are carrying high balances on your credit cards, focus on paying them down to lower your credit utilization. Consider increasing your credit limit. If you are having trouble keeping your credit utilization low, you may want to consider asking your credit card issuer for a credit limit increase. This can help increase your available credit and lower your credit utilization. Be mindful of opening new accounts. While it can be tempting to open new credit accounts, doing so can increase your available credit and make it harder to keep your credit utilization low. Only open new accounts if you need them and can manage them responsibly. Monitor your credit utilization regularly. Make it a habit to check your credit utilization regularly to ensure that you are staying within the recommended range. Remember, keeping your credit utilization low is an important part of maintaining a good credit score. By paying down your balances, avoiding new accounts, and monitoring your credit utilization regularly, you can keep your credit score in good shape and qualify for better rates on loans and credit cards. Check your credit reports regularly. You are entitled to a free credit report from each of the 3 credit bureaus, Equifax, Experian, and TransUnion, every year. Review your reports for errors and dispute any inaccuracies. Yes, checking your credit reports regularly is an essential step in maintaining good credit health. You are entitled to a free credit report from each of the 3 credit bureaus, Equifax, Experian, and TransUnion, every year. Reviewing your credit reports can help you identify errors or inaccuracies that may be hurting your credit score. Here are some tips for checking your credit reports. Request your free credit reports. you can request your free credit reports from annualcreditreport.com. Make sure to check all 3 reports from each of the credit bureaus. Review your reports for errors. When reviewing your credit reports, look for any errors or inaccuracies, such as incorrect personal information, accounts that aren't yours, or late payments that you have already paid. Dispute any inaccuracies. If you find any errors or inaccuracies on your credit report, dispute them with the credit bureau that provided the report. You can do this online, by mail, or by phone. Keep track of your credit score. Your credit score is a 3-digit number that summarizes your creditworthiness. You can track your score for free using various online tools, such as Credit Karma or your bank's online portal. Regularly check your credit reports. Make it a habit to check your credit reports at least once a year. Regularly monitoring your reports can help you catch errors or inaccuracies before they cause significant damage to your credit score. Remember, checking your credit reports regularly is an important part of maintaining good credit health. By reviewing your reports for errors and inaccuracies, you can dispute them and improve your credit score. Keeping track of your credit score and monitoring your credit reports can also help you detect any potential identity theft or fraud. Keep old credit accounts open. The length of your credit history can affect your credit score, so keeping old credit accounts open, even if you don't use them, can be helpful. Yes, keeping old credit accounts open can be helpful for maintaining a good credit score. The length of your credit history is an important factor in determining your credit score, and having a long credit history can positively impact your credit score. Here are some reasons why keeping old credit accounts open is beneficial. Lengthens your credit history. The longer you have had credit accounts open, the better it is for your credit score. By keeping old credit accounts open, you are increasing the length of your credit history, which can help improve your credit score. Increases your available credit. Keeping old credit accounts open can increase your available credit, which can help lower your credit utilization, as mentioned earlier. This can also have a positive impact on your credit score. Shows responsible credit management. Having a long history of responsible credit management, such as paying bills on time and keeping credit utilization low, can positively impact your credit score. Prevents negative impacts on credit utilization. Closing old credit accounts can decrease your available credit, which can increase your credit utilization and potentially harm your credit score. Remember, it's important to use credit responsibly and avoid opening new accounts unnecessarily. But if you have old credit accounts that you no longer use, keeping them open can be helpful for maintaining a good credit score. By lengthening your credit history, increasing your available credit, and showing responsible credit management, you can improve your credit score over time. Don't apply for too much credit at once. Applying for too much credit at once can hurt your credit score. Yes, applying for too much credit at once can hurt your credit score. Each time you apply for credit, such as a credit card or loan, a hard inquiry is made on your credit report. Too many hard inquiries can negatively impact your credit score and signal to lenders that you are taking on too much credit at once, which can be a red flag. Here are some reasons why applying for too much credit at once can harm your credit score. Hard inquiries lower your credit score. Each time a hard inquiry is made on your credit report, it can lower your credit score by a few points. If you apply for too much credit at once, the number of hard inquiries can add up and significantly lower your credit score. Signals to lenders that you are a higher risk. applying for too much credit at once can signal to lenders that you are taking on too much credit at once and may be a higher risk borrower. This can make it harder for you to get approved for credit in the future or may result in higher interest rates or less favorable terms. Shortens your average credit history. Each new account that you open shortens your average credit history, which can negatively impact your credit score. Here are some tips to avoid applying for too much credit at once. Only apply for credit that you need. Avoid applying for credit unnecessarily, and only apply for credit when you need it. Space out your credit applications. If you are applying for multiple types of credit, such as a credit card and a car loan, try to space out the applications by a few months. Monitor your credit report. Keep track of the number of hard inquiries on your credit report and make sure they are accurate. If you notice any errors, dispute them with the credit bureaus. Remember, applying for too much credit at once can harm your credit score and make it harder for you to get approved for credit in the future. By only applying for credit that you need and spacing out your credit applications, you can avoid the negative impacts of too many hard inquiries. Use a credit monitoring service. A credit monitoring service can alert you to changes in your credit report and help you track your progress in improving your credit score. Yes, using a credit monitoring service can be a useful tool for managing your credit and improving your credit score. A credit monitoring service is designed to track your credit activity and alert you to any changes or potential fraud. Here are some benefits of using a credit monitoring service. Helps you stay on top of your credit activity. A credit monitoring service can help you stay informed about changes to your credit report, such as new accounts, credit inquiries, or changes in your credit score. Alerts you to potential fraud. A credit monitoring service can alert you to potential fraud or identity theft by monitoring for suspicious activity on your credit report. Provides tips for improving your credit score. Many credit monitoring services provide personalized recommendations for improving your credit score based on your credit report. Helps you track your progress. A credit monitoring service can help you track your progress in improving your credit score over time. When choosing a credit monitoring service, be sure to consider the following factors. Cost. Some credit monitoring services charge a monthly or annual fee, while others offer free or low-cost options. Coverage. Make sure the credit monitoring service you choose covers all three major credit bureaus, Equifax, Experian, and TransUnion, and provides alerts for all types of activity on your credit report. Features. Look for a credit monitoring service that offers helpful features such as credit score tracking, personalized recommendations for improving your credit score, and alerts for potential fraud. Using a credit monitoring service can be a valuable tool for managing your credit and improving your credit score. By staying on top of changes to your credit report, monitoring for potential fraud, and receiving personalized recommendations for improving your credit score, you can take control of your credit and work towards your financial goals.